Hi, friends. Simit here from InformedTrades.com. Joining me today is Kathy Lien, currency trader. She's also on CNBC Money in Motion. Kathy, thanks for taking time out of day to join us.
That's a pleasure, Simit.
Joining or jumping right into it, I guess the first question I like to ask all the people that come on is if you could sort of go into how you got into currency trading and a little bit about your background that brought you into this business.
Certainly. Well, I actually started in the FX market in '99. So recently I've been able to say that I've been trading currencies for more than 10 years, which is a nice milestone to be able to share with everyone. The way I started in the market was, in '99, I graduated college and I basically joined JP Morgan Chase. And when you start off at a bank, typically what happens is that you are put on a rotational program. So you get to rotate through different groups to see, which one basically fits your personality and which group actually likes you. So the first group that I rotated with was actually credit derivatives. I think, thank goodness I didn't stay there because we all know how that ended up. The second group that I rotated in through was actually foreign exchange, and it was the FX intermarket, making desk and interbank market making desk, and I got along really, really well with the people there. The product, the asset class made a lot of sense to me, and I was excited about it. So that's basically when I jumped in. I joined the FX market space. I started off as a market maker. Obviously the very, very first task they give you is basically as a position taker or tracker for the senior dealers. So you basically sit next to them, you follow their trades, you mark it down, you book them, and so forth. But then shortly thereafter, they gave me the responsibility of making markets on their e-platform, which at the time was one of the first e-platforms out there. And I think I remember it being called Morgan Dealer Direct or something like that. But anyhow, I did that for a little while, and I made markets in some of the smaller exotic currencies. I also made markets in dollar yen on this platform. And when JP Morgan so I did that for a little while, then I made markets in dollar yen and Reuters. And when JP Morgan merged with Chase, I got moved to the Cross Markets Proprietary Trading Group. So basically, not only was I trading currencies, but at the time I also learned how to watch different markets. I learned how to trade interest rate derivatives. I learned how to trade over-the-counter options and exotic options, and basically anything under the sun, or at least most things. I can't say anything, but I learned to trade different asset classes. I learned how to express one view using different instruments. And I think that's, basically how I took some of that to how, I learned fundamentals and took that knowledge with me and kind of built my expertise on, not only fundamental analysis, but cross markets fundamental analysis. And from there, I spent a couple of years at JP Morgan. I decided that I wanted to work in a little bit more of an entrepreneurial environment. And so I decided to leave JP Morgan, and I found FXCM. And that's where, at the time, FXCM was an extremely small company. I think it was like 50 people, if even. And it was a very entrepreneurial spirit. So I did that for a couple of years and helped them build out their research team, their research website, Daily FX. And then a couple of years after that, I joined GFT. And tried to replicate the same success with them. I mean, there were different challenges, obviously, but through those years, I continued to trade. And at some point, which was a couple of months ago, I decided to break out on my own with my colleague Boris Schlotzberg, and that's when we have kind of decided to take our careers to the next level by moving into offering money management.
So, in terms of your approach to the markets, as you mentioned, you traded a wide variety of instruments. Is there something you focus on now? Are you focused on the spot currency market, or what's your focus now?
Well, my focus now is certainly in spot. I mean, I also trade some equities, but the majority of my focus is on spot FX, because even though I was trading cross markets, the primary product was FX, and the others were more, for diversification or for just kind of different trading different anomalies that may not be evident in the FX market.
So, in terms of your approach to currency trading, if you could shed some insight on like how a trade goes down, meaning like, for instance, how long are you in trades for? What's are you looking for a risk reward? That type of stuff.
In terms of the duration of my trades, I have two types of trading styles and strategies. One, which is more intraday, and that's really day trading. But, sometimes because I have my orders out there, the positions may be held longer than I would like, which is, instead of 2 or 3 hours or 4 hours, it may be held, 24 hours. But usually my short-term trades don't last for longer than 24 hours. And then I have, quote unquote, what I call swing trades. And those can last for a couple of days, and in a very, very rare case, a couple of weeks, but that could be a possibility as well. Now, in terms of what I look for, I focus less on risk reward and more on my strategies focus less on risk reward and more on the probability and accuracy. So I look for high probability scenarios, at least what I think they would be high probability scenarios, and I look for strategies that are high probability.
So, in terms of, are you using, stop and limit orders, or when it comes to, are you looking to ride a trend, for instance, or do you identify a resistance level and a support level that's sort of going to set the boundaries of the trade?
The majority of my trades are trend following or momentum based trades. So, rarely will I buy on a dip. Most of the time I'm buying on a breakout or something, or buying a break of a certain level, because I want momentum to be on my side. And, for those people that have read my work, usually the momentum is, caused or, has a component that is fundamentally based. But at the end of the day, it is a momentum, which in other ways look at it as a trend following strategy. And I always have stops and limits attached to every single order that I place. I may manage the trade differently, meaning that I may have, a shorter and a wider target, but I always, have the stops and orders limits in.
So is your approach sort of like set and forget? So you're looking at the charts, you see the setup that you like, a breakout, for instance. You put the stop in, you put the limit, and then boom, that's it. Or is there more to it?
If it was only so easy. There is a set and forget component to it, meaning that my first target is usually relatively shorter. So, if it hits, it hits. If it doesn't, it doesn't. It gets stopped out. But, once that scenario happens, I will actively manage the trade. And so it does require watching, especially since FX markets can move quite a bit. So if I'm not watching it, I may miss it being triggered because it's not a one stop entry, one stop exit.
Are you focused just on the majors, which are obviously going to have a much greater volume, and meant for many traders, they'll argue it's you get cleaner technical setups, or do you go into some of the more exotic and the more thinly traded pairs as well?
Well, I trade the Eurodollar the most for my short-term trading, but for my swing trades, it could be any of the crosses or the majors or any other exotic currency. It really depends on what the most attractive opportunity is, I guess.
Okay. Now I know, from watching you on CNBC, you'll often include a trade setup for viewers, and that's actually something that viewers, if you want to tune to Kathy Shaw on CNBC, she routinely gives out a trade setup, a set or with a stop, entry point, stop, and limit. So sort of the bare bones are definitely right there for you. But I noticed in watching you, often you'll reference news events. So far, it seems like your approach is very technical based, very sort of rules based. But how do you sort of factor in fundamentals, or how are you looking at incorporating news events into that?
Well, I actually would say it's slightly different in the sense that I determine my trade based upon the fundamental story. And then I look for, what I think would be nice entry and exits based upon technicals. So I'm a firm believer that having fundamentals or having a fundamental catalyst to push your trade in its desired direction is very important. And oftentimes, and much more so in these kind of low volatility range bound environments where we need, a piece of economic data or an event risk to push the trade in our favor.
Okay. I guess in terms of, where we're at now, or your, I guess, well, first, before we get to, the current economic situation, you said you're looking, or you have a fundamental view, then you're looking for a news event that can serve as a catalyst, and the technical setup that sort of, allows you to time it precisely. In terms of your fundamental view, what's the time range you're looking at? Some people have a fundamental view that's, like a decade-long view. Other people might say, a month. Is there sort of a time frame that you associate your fundamental view with?
I would say it's somewhere between a week to 2 months max.
Okay, so during that time, for instance, let's say you've got a view that you're going to be bullish on, some currency pair over the next 2 months, for instance. So from that, or based on that, would you then only trade in one direction, that pair, for that until that fundamental view is in place, or are you going to take the counter trend opportunities as well?
Well, considering that the view may be 1 week to 2 months, it really depends. But I may take the counter trend trade because I may think that there could be, like, for example, a good example is the euro. While I think that Europe is in trouble in the long term, and I think that all of the austerity measures are going to really crimp down growth and make the fourth quarter as well as the first quarter of 2013 very difficult. There's a lot of sentiment-based factors that could drive a burst in the euro dollar. Like, suddenly we get a Spanish bailout, or, recently Moody's decided to pass on downgrading Spain. Those little bursts of good news could also be potentially tradable opportunities.
Okay. Now, in terms of sort of the big picture, we're living in sort of kind of interesting times, or at least many would argue that. What are your thoughts on, the big picture? Do you think, there's going to be a collapse in the euro? Do you think the dollar is going to collapse, the yen, the British pound? There are arguments that all these currencies are so indebted that there's no way out, and just it's going to be rampant devaluation. Do you buy into that, or what are your thoughts on that?
Well, we can have a whole hour-long conversation on that. I mean, there's a lot that we can talk about. But I think at the end of the day, I think what will end up happening is, while all of the countries have a path that that have a path of weaker growth in the next 3 to 6 months due to a lot of the austerity measures that are happening, I don't necessarily anticipate, quote unquote, collapse in the euro, collapse in risk appetite, because central banks have come in with a tremendous amount of liquidity. And this light type of liquidity is what has caused and will continue to cause the lower volatility environment that we have seen. So I think that, we'll probably see more continued consolidation, more ranges. And now those ranges do provide different types of opportunities to trade, but I don't necessarily see, us engaging in another major collapse. I think 1 year from now, currencies are going to be trading a lot higher, or currency pairs will be trading a lot higher than where we are right now. But it will be a slow and gradual path towards that direction.
When you say currency pairs are going to be trading higher, do you mean currencies relative to commodities and equities? So as an asset class, are you expecting stocks and commodities to fall?
What I mean is, the currency pairs like the euro dollar, the dollar yen, the pound dollar. So it's more like, I anticipate risk to be stronger a year from now than it is right now.
So the classic risk on trade, you're saying, is something that you're buying into, which would mean, and that would mean sort of bearish for the dollar, bullish for U.S. equities, and bullish for commodities. Is that what you're thinking a year out, or?
Correct. But remember, this is a 1 year outlook. I
Right.
expect more pain before gain, and so I wouldn't. It's not time to jump into it right now.
Sure. Now, in terms of China, China's a big player in the global economy now. There's lots of talk. They're in for a big crash. This is going to result in a big shift in the whole global economy. What are your thoughts on China, and I guess especially for forex traders who may not directly be trading the renminbi? Do they even need to pay attention to China at all, or what are your thoughts on that?
Well, first of all, I think it's extremely important to pay attention to China because Chinese data these days is almost as important, if not even more important, for certain currencies. And I think that we've got Chinese GDP numbers coming up, and that's really going to play a big role in risk appetite because when we had the financial crisis, it was China and Chinese growth that kept Asia sheltered. So the pace of growth going forward will be also very important in determining how much of a either hard or soft landing some of these countries have. Now, I believe that China is not going to slow. It's going to slow, but we're not going to experience that hard landing. And the part of the reason is because China has plenty of room to inject more fiscal and monetary stimulus. And I do believe that they're going to follow up with some potential fiscal stimulus, maybe after the leadership change in November, because they want to shore up confidence. So either way, China is committed to doing more, and that will be what prevents a crash in the Chinese economy and a similar impact in Asian currencies.
In terms of the U.S. Stimulus impact, or as you know, recently the Federal Reserve embarked upon QE3 or open-ended QE. It sounds like, based on our conversation thus far, that you don't think that will have a huge impact. I guess, how would you summarize your take on the impact of open-ended QE?
It's helping. I mean, what I see is that it's not going to be the end-all, be-all solution, but it is, and it has, and it will continue to provide underlying support to different asset classes. I mean, the stock market wouldn't be holding up as well as it is right now. And bond yields, obviously, which trickles down to all these different other yields and interest rates, wouldn't be as low if it wasn't for quantitative easing. So it will help and it will support the economy, but it's not necessarily going to be what drives growth. It's just going to prevent things from getting worse.
Okay, so like a defensive measure of sorts. I think that that sort of covers the questions that I had for you. Why don't you tell people what you're up to these days and where they can follow you?
Well, the only thing I want to leave everyone with is there's a lot to follow in terms of what's happening in the markets and the day-to-day development and what the big stories are. So I encourage you to check out our website, bkassetmanagement.com, and because we publish a tremendous amount of commentary and color in the markets. You can also subscribe to our free email list where you can get our research delivered to you whenever we publish them.
Okay, that's bkassetmanagement.com. There will also be links posted beneath wherever you're viewing this YouTube Informed Trades. Thanks a lot, Kathy, for joining us.
My pleasure.
Okay, take care.